Hi, welcome again. Gabriel here. If you are not familiar with who I am, you probably should check the other videos on the channel. I think the first one I did was pretty much the introduction about myself. Well, for those who already know, it's nice to see you again, clients. Nice to see you trading, who is looking up at our channel and grabbing probably some very good valuable information that we do from time to time here in the market. So it is actually today is 23 of October 2023, and I would like to talk something that I think it's really important. There's something just pop up in my mind about the euro against the Australian dollar, which have been currently against what I was what I thought it would be. So that's something really important for me to take a look on that and see how we manage risk. And I do actually follow a set of rules which I keep note here on my notepad just in case I'm writing down what I need to do. And it's really important for you, if you have an edge, to follow certain aspects of it. Actually just follow your rules. Really, it's good to stick with it. So I got the first one is the one that I was wanted to talk about because I was just looking into it once again, and I like to do it when I feel unsafe about something or I'm getting too emotional, and then I read it. That's really good. That keeps your mind at ease and keeps your brain at work. So I wanted to talk about that actually because it's really important. Some people don't really know how to manage their position, how to manage how much exposure they have on the market, and especially for those traders who are hedging, it's really important to keep it on your deck of cards, because the risk management is the most important thing ever, I think, on trading. So that's, you can have all the data that you want, you can have all the indicators that you want, and it's still it won't be the same if you don't really manage your risk. Because if I know something for sure is that you can never know where the market is going to fluctuate it to. So it's probably go on your position, it probably won't go your position. So that happens from time to time. And so what I can tell you now is, actually I was looking on this and I was feeling very emotional, and it's something that really happens in most trading. Actually, it happens from time to time when you have this situation, when you are open a position that's now very lost and you're like, oh my god, I'm gonna lose all my money and stuff like that. Well, I don't really think like that. I'm just gonna think like how I'm gonna manage this risk. That's the really concern I'm doing. And I've spoke about hedging some video prior to this, and I just wanted to make sure I got the really good information, and I did not remember getting into the subject of managing your risk and how exposure you are to the market. So if you have a balance account that have 5,000 euros or you have 50,000 euros, it doesn't matter. You always want to keep your profits bigger than your losses, and one way by doing that is not exposure your portfolio more than you need. So I have a rule that in some of the accounts that I do for for my business as well, I try not to, and I actually succeeded on that, not to exceed 10% of the balance. So for instance, if I have a 1,000 euro account, I try not to expose more than 100 euros on that account. And for some people, like, wow, how am I gonna control that? It's very simple, really. If you're going to do hedging, I certainly use hedging a lot, because most of the time I am wrong at the market. I'm proud to say that, actually, but at the same time I'm really good at managing risk, and that's the key thing. Some of the traders really don't do. They feel very emotional about such trades like this one. Oh my god, they just go like, oh my god, this is gonna go really bad, this is gonna go all the way up, and they start to think need to go down, and you start praying for every existing high. I'm not gonna speak any name and try not to be offensive to any religion, but any divine creature that the market goes down, and for some reason, but that doesn't really happen by 85% of the time. So if you want to get your managing right, I think that first you need to set a maximum risk that you're, or actually not risk, but a maximum exposure that you're ready to take on a certain balance account or in a certain trade. My set of rules states that I shall not exceed. It's actually written like that. I can say number one, risk shall not exceed 10% of balance. So that's pretty much telling me that risks shall not exceed 10% of my portfolio on that certain account or any other account that I have. I mean, of course, if I have an account that it's certainly I can have a little more wiggly room around it. I can do it at perhaps 20% if I do only trades that I feel more confident about. And guts are something that you really follow if you study a lot, because sometimes you have a deep learning of the market that you don't even know that you're learning. It's really psychology. There will be a channel in the description that tells a lot about trading psychology, and I think everybody should watch it, because it literally tells you how wrong you are if you ever feel like, oh my god, I saw this video, this guy is showing me the maximum indicator, that kind of stuff. Anyway, I'm not here to talk about that. I'm here to talk about the risk, your risk or your exposure of your balance, which is something that it's really simple. It's actually really simple math. So let's talk about that. Let's pretend I have a 1,000 euro account, and I want to actually I do not want to exceed more than 10%, which is my rule. So my 10% shall be 100 euros, and that 100 euros cannot be for instance, if I want to do a trade and I also want to do hedging on the trade, which happens most of the time, that means I have to split that on half. That means I cannot risk more than 50 euros on each trade, because if I'm gonna do hedging, I will risk the double of that. So I will risk 100 instead of 50. So that's something that it keeps in mind, and some people don't know how to do it, so I'm just gonna show you how to do it. I actually already put it here, this website, which actually you can access any site that you want. They have loads of sites around there that tells you how to calculate risk, but I like to do it this way. I go here to my FX book. This is something that I use all the time, really, to just calculate it. I know there are the calculations to be exact, but that's not really necessary. It's like you trying to do all complicated mathematical questions without using a calculator nowadays, which, well, you can certainly be good at it, but time is not your friend in the market. So I really use tools to help me to get what I want fast. So time is the most important asset for me. Alright, so I use this tool to choose the currency pair, choose the account currencies. For instance, I'm using euros here, and let's put here, I want 1,000 euro. This box right here, I don't really feel, you can fill it with anything. It doesn't matter, because this is what I wanted to do. It will be set for risk ratio on percentage, but you can change to swap money, and then you can put over here, I do not want to risk more than 50 euros. That's it, 50 euros, that will be the amount. And then you go to your broker or whatever tool you're using to analyze charts, and then you look at yourself and go, for instance, let me just, I cannot delete it right now because this is the exact position I'm in the broker, so I'm not going to delete this, but I will You know what? I will double it. So I will just clone this position. There you go. Alright, and I'm gonna to do exact the same entry price and all the other things. So this will just give me a minute here. I'll be very fast on it. Profit target, there you go. And then I'll go here as well. Stop level, and this is the stop level. There you go. So it's the exact same thing. So let's say forget this for now. This is the currently position that I will be hedging probably if the market continues to go that direction, which I think will be, and I'll explain that later. Let's focus on this. Let's say that the market actually moved from here. I open my position on this price, and then I want my risk to be not more than this. I think this should be enough for me to say, all right, it's not working anymore, and it's probably not going to work very anytime soon. So let's see how much exposure I will be, how much lot size I need to be investing for this to be a 50 euro risk. So I go over here on TradingView. It's actually really good because it already tells you 123.5. That's the pip loss. So you get the pip loss and you put it over here. 125.5. If I'm not mistaken, it's 0.5, correct? Yes, it is correct. Okay, so I calculate now. Trade lot size equals 1000 units. That's what I usually do. So, and then we'll calculate me how much what lots I should be using, which is 0.07. Well, that's not much, but it is the 10% based on your risk. And I can tell you by experience, do not try to rush on a market because it's not your friend. You're gonna be wrong by like 95% of the time mostly, but it's actually how you manage this essential part. And when I was first learning, I didn't get this at first. I was like, wow, if I'm probably wrong, I will take my trade earlier. But that's not what happens most of the time. We're like always hoping for the best. And this is the best way to give that to you, to hope for the best. So you only gonna open lots of 0.07, which gonna translate this to a total exposure of 50 euros. And that's it. And if you need to open a second one in here, if you need to open a hedging account in here, a hedging trade in here, you're also gonna do the exact same risk, which will be 123.08. No, it's not 0.8, but you get the idea. 123.5, which is gonna be the same risk as this one. So in worst case scenarios, I have a 1000 euro account, and if I'm right, I can get 149 pips, which is about 55 euros, and then I can close my trade if this market, actually this should be a hedging position, and then when you open the hedge position, your stop loss should be all the way around here. I tell you that because if this is open to the opposite side where your original trade was open, that means your P&L, which is your total loss versus your total gains, should be locked on a 50 euro loss. That's it. That's all that it is. And you just wait for the market to go to the next zone, and then do some expect it to do some downside position, so you can get 186 pips of profit, and then you waited for the market to just lose a little bit of momentum, just enough, perhaps around here, which the market tends to do. So, and then you're gonna have a loss of only 123 pips, so against all the 186 that you have. So you have a difference about 40 pips more on profit. So you're gonna run on profit even though you were wrong at the time. So that's about 43 pips. Let me check. 42. Yeah, that's about 0.25%. So instead of losing your money, you're actually gonna be winning, son. Winning, son. It just remind me of a meme. You're gonna be winning your position even though you're wrong at first place. So that's what I do. That's what people have to understand, that managing risk is essentially the best thing you can do on a market by far, because without managing your risk, you're never gonna know how much you're losing against how much you're winning. So you can win one trade that's 0.5 lots, and you can do 1% on that of the winning, but then you can lose another one that's let's say 1.2%, 1.2 lots. That's a difference of P&L. It doesn't matter if you lose just a little bit. 50% is enough for it to be against your P&L. I think that's 50%. Yeah, it should be 50%. I'm not gonna do a complicated math with something that's very simple to understand, that managing your risk is by far one of the best things you can do about it. So check it out. Firstly, this YouTuber, it's actually a really nice guy, and I really recommend him. It's not because he's some friend of mine. Actually, he probably don't know who I am, and that's really good. But he's someone that is really trying to help you in the market, whilst there are so many other people there trying to scam you all the time. So based on that, I was just wanted to get this opportunity of the euro against the Australian dollar to tell that, and as well as show how much the market is fluctuation. On our position, we have the euro GBP, which is already something that's going on the main account, as well as the gold, which we are expecting to fall even further. And both of them are running in profit. If they by some reason don't start running in profit, I can do the exact same thing as I can do the euro LD, even though I was probably wrong, even though these two are currently right. Let's keep it that way. And well, I guess that's it. Oh, actually, I forgot to say something. The euro against the Australian dollar, that was something that I really want to talk about, because on the new flux data that we gathered last Friday, I think, yeah, it was last Friday, so that was the 17th, I think it was the 17th, yeah, it was the 17th, so it was last Tuesday. It's gathered on Friday to actually it's gathered on Thursday to see on Tuesday, and to what positions were fluctuating on Tuesday. And then we can actually see that the euro, which is the one responsible for most movement of these two markets, because we have the Australian dollar a little bit, not very much of higher player on this market, so we have more stronger the euro that have more volatility. Actually, it is actually the one who controls mostly the market over here, and we actually have this one on a very low lower low, actually starting to build lower low, and I'm guessing somewhere around here back to the back to the 400,000 we should see some position going down. That's the only reason why I'm hedging this position. So I'm guessing the 17th is somewhere around here, yeah. So it started to move up just a little bit, as you can see from last 10, yeah, 10 was here, and then start move up, and then a little bit down, and start move up again. That's why I opened this trade in the first place, because I thought, okay, this is a very strong trigger point, and I was like, okay, this is something that can work. If it doesn't work, let's go to the other one. Let's go to the stronger one. Let's one to the one that had been built last time, which is this one. So I'm waiting for that, and let's see how it goes. You never know. and I actually can see the Euro GBP as well is starting to lose some momentum. That's why I'm still on the hope of this one turning out to be a profitable trade. If it doesn't, well, we hedge it. Same thing, always, over and over again, until we get it right, and we close, or we close break even, or we close in a profit. That's all we need to do. Actually, if we go to the 4 hours, let's just take a look on that. 4 hours is actually the one that moved more, and I can actually see here in from 6 p.m. until now, so we are 20 minutes for this market to be closed, and something that's telling me probably it's not a good idea to stay on this market for very long. Once again, I'll be hedging. I won't be closing, I'll just be hedging, because then I can have a second opportunity, and if it doesn't happen, I can close this short on net break even, and then I can close this buy position on on a little bit of loss, and then I can just get my position down again if that happens. So either way, I'll probably be getting this trade right by 95% of the time, most likely. So yeah, just increasing my odds of success here. So it's 50-50 if you press the buy or sell button. It's a little bit more when you get a data like the flux, and it's a little bit more when you have confluations with other markets. That's really good. It's a little bit more percentage of not being wrong, if you know what I mean. It's not being wrong, but it's just my percentage of being right when I place a position should be much more than someone that's just betting on the market, which is just placing buy and sell at the same time. You can make money on it, on this actually 50-50. I never see anyone doing it, but well, if you like that way, who am I to blame you? Actually, who am I to stop you? I'm no one. So well, anyway, it was nice to see you guys again. Hopefully to see you guys very soon, and thank you very much for watching.